Bro, interest rates just did.
What?
That's right, ladies and gentlemen. We just had our largest single day drop in interest rates in recent history, and it's a very big deal. So I'm going to be telling you guys about that in this video. And I'm excited because whether you're a buyer, a seller, an investor, this affects you big time. So make sure you stick around for the whole video. Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate agent. And in this video, we're going to be talking about that recent change in interest rates, what it means for your wallet, as well as what kind of deal you might be able to expect to get in this market and what those payments would look like if you get the deal and you get the lower interest rates versus what it would have been before. So it's pretty exciting. I'm pumped. I hope you're pumped. Let's go ahead and pump our way into this video. Okay, so what we want to look at first here, guys, is this little graph right here. I'm gonna zoom it in for you. So we have the 30-year fixed. You can see it's right at 6.65% as of November 14th, which was yesterday, okay? I'm filming this on Tuesday, November 15th. So you can see there was actually a 0.03% increase from the day before, which was when the largest decrease happened, okay? So I'm gonna show you guys that. This is what it looks like on a 4-year chart, essentially there. You can see, you know, this is like the depths of like the sub 3% rates here. And then in the last year, you can see how much of a jump up we've had. And then this line down, that's our single day drop, okay? So pretty exciting. Here's what that looks like on a 1-year chart. So you can see going up, riding the escalator up, and then single day drop, right there. Love it. You love to see it, you know, you really do. So here's what it looks like in terms of the last few days here. So November 9th, the interest rate was 7.22% for the 30-year fixed rate conventional mortgage. Now, we're looking at that type of mortgage product because it's the most common mortgage product that's used. Of course, if you want to see what this is for FHA or any other type of loan product, you can always reach out to me directly. You can book a consultation with me at the link below, or just call, text, email, you know, the little cup with the strings, whatever you want to do. But this is what it is for 30-year fixed conventional. Now, from 7.22 to 6.62, okay, that was that, you know, that big decrease. And then it went up 0.03% from November 10th to November 14th. That was from Thursday to Monday because, you know, Friday was a holiday. Now, so that's a aggregate drop of 0.57% from the 9th to the 14th, okay? So let's look at that. What does that mean? What does it look like, okay? So we're looking at Miami-Dade single-family homes right here, median sale price, okay? Right now, the median sale price in Miami is $576,000 for a single-family home, okay? So just wanted to show you guys that graph because that's the number we're going to be using here. And what we see here, we're using that 576. We're taking a 20% down payment just because that's the number I chose. So we're looking at the 7.22% interest rate there. We took some basic assumptions of $10,000 property tax, about $6,000 yearly home insurance. These numbers could fluctuate. Your private mortgage insurance of 0.5%, because that's generally what it is for conventional. Now, that's going to result in a monthly payment of $4,467 for that median sale price home, okay? So 4,467, all right? So remember that. Now, if we do the same exact house, same, you know, $576,000 median sale price, and we look at the new interest rates, what we have as of yesterday, 6.65%, okay? Now, remember, that's a 0.57% difference or 57 basis points. Now, what that results in, same assumptions as far as taxes and insurance and all that stuff, is $4,291, okay? So that's a difference of $176 a month. Nothing to sneeze at, you know, that's a good amount of money, $176 a month. I mean, that's a gym membership. That's, you know, gas for the whole month for a lot of people. You know, that's a decent amount of money. Now, let's look at what you might be able to pay for your monthly payment if we are able to get a list price to sale price ratio of 90%. What does that mean? Well, that means you're basically getting a 10% discount, so to speak, from what the list price was, okay? So if you got a 10% discount from 576, it would result in a sale price of 518,400. Okay. Now, why do I say this? Well, because anecdotally speaking, and we're going to go into another video, we're going to be talking about list price to sale price ratio more in depth, but anecdotally speaking, I'm starting to see single family homes going for significantly less than the list price. Anywhere from 5%, 10%, 12%. I've even seen some going, 20% less than the list price or even greater, depending on how overpriced the listing was to begin with. But let's just assume a moderate, deal of getting 10% off, okay? Now, 518,400. All the other assumptions are the same. We're using the new interest rate there of 6.65%, okay? And that results in a monthly payment of $3,995. So that is a difference of $472 a month from the full sale price of 576 and the other interest rate of 7.22, okay? So $472 a month. That's a lot of money, people, okay? So with this new rate change, with the new change in interest rates, with the ability to now get a deal in this market, now that, like in a previous video I covered, that we're now in normal market activity in Miami-Dade, meaning that the months of inventory is 6 or greater. Months of inventory is the amount of time it takes to sell all the existing supply if no new listings came on the market. So now that we're in normal market activity, okay, using that median sale price, getting that 10% discount from there, getting the new interest rates, you're looking at a savings of almost $500 a month from just last week, okay? So, assuming that last week you didn't get the deal as well, right? So we're taking some assumptions, of course, but it's just to illustrate to you guys, this is the market that we're in now, okay? So what does it mean if you're a buyer? What does it mean if you're a seller? What does it mean if you're an investor, okay? If you're a buyer, have everything ready. Get your pre-approval letter. Make sure that you're working with a great realtor to identify the right properties, areas, and really a good realtor is there to make sure you don't buy a crappy house, At least that's my opinion. My experience really is like, I'm not helping you buy the house. I'm helping make sure you don't buy a crappy house, okay? Now, of course, good realtor is going to also help you find the house as well. But the real brunt of the job is, working with a good realtor is them making sure that you don't get kind of effed over in a sense, right? Now, if you're a buyer, like I said, have everything ready, start working with a great realtor, and the time to start writing aggressive offers is here, okay? Because like I said, we're starting to see, that list price to sale price ratio going for less and less than in previous months, okay? So, deals are happening left and right. You also benefit of working with a good realtor is they're going to be able to run the comps, figure out what the actual market value is, see the other houses in the area, see how much they're going list price to sale price ratio, and all these other factors of how a skilled agent is going to look at the market, look at that home case by case basis, look at the history of the home. What did they buy it for? Are they flipping it? Have they never moved? Et cetera, right? It's very, there's a lot of context there, but, what does it mean if you're a seller, okay? If you're a seller, what this means is you need to make sure that your property is properly marketed. Again, working with a good listing agent or a great listing agent, such as myself, is going to make sure that your marketing really highlights the house. I can't tell you how many $2 million, $3 million houses or more or less, just any price range that I've seen with like 5 pictures that were taken on a potato. It's insane. People are out here, not really doing the best for their sellers when they do that, okay? So, and that's just one example of how marketing can be lacking, okay? So if your marketing is lacking and, your listing is going to be expired, definitely call me, once that's expired and we'll get you set up right. Make sure that you get the most for your home. If you haven't listed it yet, it's imperative that you list it for the proper market price, okay? The market value. This is not the market to be testing the market to see if you can get more than the market value. It's not going to happen, okay? There's no magic buyer out there who's going to pay more for your property than what it's actually worth, okay? So, and also if you're a seller, what this means is you need to be very responsive to the market, okay? If you have had your house on the market for a week, 2 weeks, or more, and you haven't had any written offers, that tells you everything you need to know. You probably need to drop the price, or it could be that the house doesn't show well, or that you haven't opened up enough times to show the house, right? So those are the three reasons that a house doesn't sell. And those are just a few things, what this means if you're a seller. Obviously, there's way more context. I can give you guys the full lowdown if you reach out to me and, if you want the help of a expert realtor. Now, what does it mean if you're an investor? Like I said, the time to write aggressive offers is back, okay? So we can get real aggressive out here, guys. There are some properties that I've seen $200,000, $300,000 price cuts. That's not indicative of saying that like every house is overpriced by 200,000 to 300,000. There are definitely some people who are being like way too optimistic. Some people are being a little more realistic. The trick, working with a great agent is they're going to be able to tell you which ones are, overpriced by how much, and really kind of let you know, hey, this is the market value, right? So, from there, as an investor, once you know what that market value is, then you can kind of get a better idea of what your offer should be, right? Now, there's a lot more that goes into it. I can, like I said, give you guys the full rundown. Reach out to me for anything that you guys need regarding Miami real estate, and I'd love to help you guys out. All my contact is in the description down below, so you can set up a consultation with me on my Calendly link. You can just reach out via text, email, DM, anything that you guys want. I'm here for you guys. I'm here to help out. I'm here to serve the public. So that's about it. Jake Fletcher with the Fletcher Group at eXp Realty, your Miami real estate agent, and I'll catch you guys on the next video. Peace.